Good evening. This is your Northeast Asia market close briefing from AJP. Yesterday's panic turned into today's relief rally. Softer U.S. inflation reignited the AI trade, sending Seoul soaring, lifting Tokyo and leaving Shanghai as the region's lone major laggard. One U.S. inflation report split Asia in two today. June CPI came in softer than expected, easing fears of another Federal Reserve rate hike and pushing Treasury yields lower. That revived buying in technology and semiconductor stocks across the region. Korea led the rebound with a gain of more than 6% after Monday's crash, while Japan climbed about 1.5% as chip equipment makers rallied. China, however, moved the other way. The Shanghai Composite slipped as investors focused instead on slowing domestic growth after weaker second quarter GDP data, showing Beijing's economic concerns are beginning to outweigh the global AI rally. The KOSPI closed at 7,284, up 428 points, or 6.24%, recovering a large part of Monday's historic sell-off. The rally began almost immediately after the open and was so strong that the Korea exchange triggered a buy-side sidecar just minutes into trading. Foreign investors bought roughly 2.4 trillion won worth of shares, while institutions added buying. Retail investors, who aggressively bought the previous day's plunge, turned sellers to lock in profits. Semiconductor heavyweights powered the rebound. SK Hynix surged 8.83% to 2,082,000 won, extending gains after its US. Listed ADR jumped more than 27% overnight. Samsung Electronics climbed 6.27% to 279,501, while SK Square soared more than 16% as investors piled back into AI-related names. The rebound followed a powerful overnight session on Wall Street, where cooling inflation and lower Treasury yields revived appetite for technology stocks. But analysts cautioned that one strong session alone does not confirm a lasting recovery. Whether today's rally becomes a new uptrend will depend on upcoming earnings and whether AI-driven memory demand continues to justify lofty valuations. The Shanghai Composite closed at 3,954, down 0.32%, making it the only major market in Northeast Asia to finish lower. Unlike Seoul and Tokyo, China's weakness reflected domestic concerns rather than global technology sentiment. Investors digested slower than expected second quarter economic growth, raising doubts about the pace of China's recovery, even as global markets welcomed softer U.S. inflation. Consumer heavyweight Kweichow Moutai bucked the broader market, rising 3.05% after bargain buying returned to China's largest liquor maker. By contrast, PetroChina slipped 0.1% despite elevated oil prices, while Industrial and Commercial Bank of China eased 0.15% as financial stocks remained subdued. Today's divergence highlighted a growing contrast across Asia. While Japan and South Korea rallied on AI optimism, Chinese equities remained driven primarily by domestic growth expectations. The Nikkei 225 closed at 68,755, up 1.49%, extending the global semiconductor rebound. Investors followed Wall Street's lead as lower U.S. inflation eased concerns over additional Fed tightening and renewed buying in AI-related technology shares. The biggest gains came from semiconductor equipment makers. Advantest jumped 5.42% to 31,390 yen, while Tokyo Electron gained 4.54% to 74,360 yen, making them the biggest contributors to the Nikkei's advance. Not every technology name participated. SoftBank Group fell 3.74% to 6,328 yen, reflecting continued profit-taking after recent volatility in AI-related investments. Japan's performance reinforced a broader regional theme. Investors are once again rewarding companies directly tied to semiconductor manufacturing, while becoming more selective elsewhere in the technology sector. Today's rebound showed just how quickly sentiment can reverse when inflation surprises in the market's favor, but it also reminded investors that this remains an AI-driven market. Korea and Japan surged because semiconductor optimism returned. China lagged because domestic growth concerns did not disappear. The next test comes not from inflation, but from earnings. Markets now need corporate results to prove that today's optimism is supported by fundamentals. We'll be back tomorrow at the close with everything you need to know from Northeast Asia's markets. If this briefing helps you stay ahead of the region, subscribe and turn on notifications. Thank you for watching AJP.